Rates are dropping, the 10-year is sliding, and suddenly mortgage costs are falling. The White House said this was coming, but is it a win for home buyers or just a setup for something bigger?
We're going to move on to thing number 4, moving into the mortgage markets. I know that's been a space too where lots of uncertainty, what's going on, commercial, residential side, both ends. You say this wasn't the intent of the White House, but they did tell us it was coming. You're going to break it down for us, Gary. And thing number 4, mortgage rates falling again.
So, Rob, recently mortgage rates peaked at over 7%. And when the St. Louis Fed updates their data, the next point is going to show a further decrease in financing costs. Um, the last reading of that was just over 6.6%. But, as we pointed out, the yield on the 10-year Treasury, which the mortgage rates typically price off of that, right now it's 4.15. Within the last 24 hours, it actually, the 10-year traded at a 3.9% yield. So, we're going to see mortgage costs coming down. Typically, when mortgage rates rise, property prices fall so that people have similar monthly payments, right? Like you can afford a certain payment, whether that payment goes to paying principal or paying interest expense. People, they care, they should care, but for a lot of people, they really just care about the monthly payment. And I understand that. So the hope is that, when mortgage rates rise, property prices would fall. That isn't what happened the last time around. What happened was when the Fed raised rates and the bond market moved with that, and we saw the 10-year go from, basically we saw mortgage rates go from under 3% to over 7%. You would have expected property prices to fall. They didn't. And the reason for that is because so many people that had these advantageous 3% mortgages said, well, there's no way I'm selling my house now and buying a new house where I'm going to have to get a new mortgage at a much higher rate. And people were in this really weird situation where they could have sold a large, expensive home, bought a smaller, less expensive home, but because the mortgage rate was higher, had higher monthly payments. Nobody's signing up to do that. So the question is, will we see a reverse of that this time around? And, normally you would expect that lower mortgage rates, easier financing would lead to higher home prices. This is how you blow up an asset bubble. In this case, what it may do if rates come down another 50 or 100, 150 basis points, something in that range, is it may actually free up supply. It may be enough to get people to say, okay, I'll put my house on the market and, move and take the risk of getting a new market rate mortgage. And so it actually could put more supply on the market and reduce home prices. It would be counterintuitive, but in this situation, it's actually something that we would expect.
Yeah, it's interesting. I think a lot of people my age are kind of in that same boat. I know we are too, even personally locked in with the low rate, but then it's like, okay, the jump into something that's bigger. Yes, we would need it, but you're just buying a lot less house. But we've been actually actively looking and kind of seeing the same things, right? Starting to see a lot more supply, stuff sitting, even the consideration to throw offers far below asking, just to see, what type of bite you might get. And I think it's only going to shake out more and more as we move into the summer and towards the end of the year. Gary, circling back to the first point leading into this, I mean, wasn't this what the White House told us was going to happen?
Yeah. I mean, the fact, again, to quote Michael Guyad, we've been telling you that they were going to kill equities to save bonds. And so I don't think that the Trump administration was doing this in relation to the housing market. I think, that the plan, let's just take a step back. In his first term, President Trump used a rising stock market as a report card on his presidency. This time around, right, tariff discussions and announcements have caused equity indexes to fall. And the president's flat out said he's not concerned about the stock market. He repeated that again over the weekend. This is a situation where the White House is making it explicitly clear they will take down stock prices in order to push money out of the equity markets into the bond market and reduce yields on the 10-year Treasury. and allow Besant to refinance. Again, he's got to refinance $7 trillion. So I don't think the Trump administration was aiming at housing prices. But again, we told you this would happen. The White House told you this would happen. This is exactly where we are on this. And the one thing that is a positive, Rob, for people like you, is I think a lot of young people have been unfortunately priced out of the housing market by, just a combination of underbuilding, really high prices, higher mortgage rates. Houses are just really unaffordable for young people, and it's delaying family formation. People are afraid to have kids. They feel like they can't afford it. None of that's really good for society. So, even as a homeowner myself, I can certainly see the value of more affordable home prices for people. And, that may not be great for me, but I think it's probably good for the country. And I think being in a situation where young people feel like they can't afford to get married or
Uh-huh.
start a relationship or start a family or have kids or own a home, it makes them feel isolated and locked out of the system. And at
Mhm.
this point, we got a whole generation of people who feel unfairly locked out of the system. And certain things are their fault, but this one is not.
Yeah.
Certain things are choices that people or groups of people or individuals make. This one is not on them, right? This one belongs to the Federal Reserve. And
Yeah.
so, and Congress as well
Yeah.
for overspending.
Yep.
So, I think that's where the blame on this one lands. And, I think, again, President Trump is trying to get rates down so that they can refinance the debt. But there could be benefits for young people who want to own homes here, and that would not be a bad thing.
Sure.
And, for people who find this interesting, let us know. If you're watching this and you did buy a house recently, or you're thinking about buying a house, or you tried to buy a house and, it fell through because you couldn't get mortgage financing, whatever it is, I'd be interested in your stories. Maybe, put something in the comments. I'd like to know, what kind of experiences DKI viewers are having with this. It'd be interesting to see if you're comfortable writing in.
Yeah. Yeah, I think definitely would be interesting to hear what everybody has to say. I think even personally for me, I've been thinking about this a lot. And Gary, I mentioned to you, we've been looking at commercial spaces, right? Because I mean, the commercial
Yeah.
spots, and we've been talking about it forever, have just been absolutely hammered, and they're so suppressed from a pricing standpoint. And with us here in Southern California, obviously market pricing is, it's always you're okay making that bet just based on the location, right? And where you are, and okay, you're looking long term more often than not. But then I also thought about it too, and like, hey, who are the impressive people that we're bringing into the company that are really excited about what's going on? And it's always the young people, right? Like whether college interns, entry level, looking to really get up and going with their career. And I think you nailed it, they've physically been isolated, right? In the sense of, hey, everyone stay home over the last 4 years, work remote, suppress creativity, don't communicate in person. And so we've actually been thinking of it the other direction as like, hey, this is creating actual opportunity to bring along the young generation, to get them, back involved in community and being around people and building stuff, right? Which I think a lot of that has been lost, but I think a lot of that is looking to be injected back into the American economy and manufacturing and building here and promoting our young people who I think have really been failed by the system over the last 4 8 years, probably even going back on a decade and further, depending on how long you wanted to take the argument.
Rob, I think you make a really interesting point. And, I'm a couple decades older than you are. And it's really interesting to see the way the two of us are going in opposite directions on this. And it's different from the narrative that people typically have, right? So the narrative we've seen over the last few years is all of the senior people, all of the Gen X and boomers are, saying to your young people, to their young people, you have to be in the office. You have to be in the office. I want you back in the office. And, the narrative has been that the young people are saying, no, commuting is stupid. It's a waste of time. I don't want to do it. I can work from anywhere. I want to work from home or wherever I am. And they've been fighting that and saying, I don't want to return to the office. And what's really interesting is at Flying V, you're seeing the advantage of having a nice office that brings people in and creates that community. Now, a generation older than you, I refuse to have an office. And one of the things we disclosed here a couple weeks ago is I've made an agreement. I've signed a contract to rent out my house for a year, starting May 1st. And I'm going to spend the next year working from everywhere but here. I work from all over the world
Yep.
and work virtually. And so it's really interesting to see the two different directions we're taking. And then earlier today, I got an email from an organization that tries to place young interns. And they sent me something saying, hey, look at these 3 or 4 or 5 young interns. Would you consider taking any of them on? And I scrolled through, and the thing that jumped out at me, Rob, is every single one of them said these young people said they would only accept an internship if they could be in the office a minimum of 3 days a week. They wouldn't accept a virtual internship. They were like, I will only do this if I can be in the office 3 to 5 days. So I'm thinking, well, I'm going to be working from South America, Central America, Europe, maybe part of the Middle East. I'm going to be all over the place. I couldn't take any of these people even if I wanted to.
Yeah.
Right. And so it's really interesting to see younger people saying,
Well,
we only want to accept a job if we're going to be in the office.
yeah, and I mean, I think it's a fascinating dynamic because if you think about it, the college experience for a lot of those that are now moving into the workforce, where we are seeing the best benefits, is two things. They know social media and they also know AI, or they're at least not afraid of it, and they see the exact benefits of it, or they're somewhat already familiar with it, right? But they've been robbed of that community or even that pipeline to then get them into that next phase. And they've already said, I've already been sitting in my room for the last 4 years. I don't want to be doing that any longer. Right. And so now I think it's like, okay, myself as a local business owner, like, all right, well, let's lean into that. Let's create a space where, yeah, people are excited to come. They want to feel a part of something. They want to build and create, because I think it really has just been a generational shift that has happened, I think, more or less synthetically, right? And
Yeah.
now we're kind of seeing what that has created. And the younger generation, for as bad of a rap that they're getting, they're pushing back, like you're saying, and saying, no, like, you guys had all these, cool experiences, places to travel, meeting people in person, going to lunches, working in the nice offices, and now I'm just supposed to work from my basement and I have no upward mobility, and I'm not seen, I'm not heard from, I'm not having hands on with real interactions, real business and things that are happening, right? And I think that's what you're seeing, and what's crazy is it's happening like this, right?
Yeah.
In what before would take months to kind of move the market, it's happening almost overnight, which has been wild.
Yeah, it does feel like there's been, to use their vernacular, an instant vibe shift.
Yeah.
That generation of people in their 20s went from, you can't make me come back, to, I won't take a job unless I have somewhere to go. Now, now listen, part of it from a career development point of view, I do see their point of view. Part of it, that it's partly on them as well. Like earlier this year, Rob, to your great discomfort, I was working from Thailand, Vietnam, Korea. Over the next year, I'll be working from El Salvador and Nicaragua, Guatemala, Portugal. Like, if you don't like working from your basement, then go somewhere. And those options are available. If you're not
Right.
happy with your circumstances, like,
Right.
they don't have to sit at home. They
Yep.
could be adventurous. They
Yep.
could work from anywhere. In fact, you know what? A guy I want to give credit to, somebody who is a huge contributor to the 5 things, DKI intern Cash and Crow, who did a great job on this week's 5 things. One of the things I'd love to see about Cashin personally, professionally, he's advancing really quickly, but personally, he travels a lot and is willing to get on a plane and go somewhere on his own, just like I do. Like, I'll meet people there. It'll be fine. I'll have
Yep.
interesting experiences. Like, he just buys himself a plane ticket, finds a place to stay, and goes. And I think
Yep.
that's phenomenal. I love to see that about him. So people have every right to want to be in an office, but if you're complaining because you don't like working from home, then go work from somewhere more interesting.
Yeah, and I think that's where too the business owner's side, I think, you're seeing that dynamic that is shifting though back to heavier weighting on the value. We're getting down a tangent, but this is great. Like heavy value on the creative or actually the in-person aspect of the business too, right? Because so much of what you had to be in person to actually create before and took a lot of time, energy, and effort is now being done by automation, right? But the elements that are missing are that human element that,
Yeah.
is a lot easier to do in person, right? And I think that's what you're saying.